a lot of the time when we're thinking about real estate, we're talking about real estate being priced in currency. So we talk about the average or the median house in Australian dollars, for example, or US dollars, or whatever currency you have. And when currencies move, this has a big, profound impact on real estate prices because money moves across borders. Investors move their money based on where they think a currency is going. And one of the most significant things to happen to Australia in a while is the movement in the Australian dollar. The Australian dollar is finally starting to move, and that's going to have a profound impact on the way that Australian real estate starts to behave. So I'm just going to give you guys a little bit of a context as to kind of where the Australian dollar has been over the past 5 years and the factors that drive the Australian dollar. Why is the Australian dollar been so weak relative to the US dollar? And if it strengthens, what are the factors that are going to make it strengthen? The Australian dollar is one of the top 5 or 6 currencies that are traded around the world. So it's one of the big currencies, one of the most heavily traded. It's a main player in the currency space. You've got the US dollar, the euro, the Japanese yen, the Great British pound. You've got the Aussie, and then you have a basket of other currencies that make out the top 10. And the Australian dollar is seen by traders who trade foreign exchange and money markets as a currency, as a currency that's driven by commodities, similar to Canada to an extent, but it's seen as a commodity-driven currency. So when commodity prices do well, when the hunger for commodity prices increases, a lot of traders see that as positive for the Australian dollar because Australia has a very large export base of minerals and resources. And commodity prices since the pandemic have been mixed. Oil and energy prices have been trending lower, and the other metals have finally started to move. So you'd be very familiar with the increase in gold, in silver. That's now spilling over into other metals like copper, for example. And then you've got other industrial commodities like iron ore, like nickel. All those things start to move higher when the leaders like gold and silver start to move. So there's a lot of momentum behind resources at the moment and the resources that Australia mines. Australia is very heavily reliant on iron ore, but it's also reliant on natural gas. It's reliant on copper, for example. We have some great world-class copper mines. We're a major gold exporter. So all these things are going in the right direction. So the Aussie, as you can see on the chart, has trended from around the pandemic period where it was trading in the mid to high 70s. It has trended lower. And if you've been traveling overseas, you'd know that early last year, about a year ago, the Aussie did really flirt with that 60 US cent range. There were a lot of calls, a lot of investment banks came out and said that the Aussie dollar is going to slip away. It's going to fall into oblivion. It's going to trade with a 4 or a 5 in front of it. And that hasn't happened. Over the past year, it's up about 10%. So as of the time of this recording, we can see that it's gone from those low 60s to those high 60s. And the Aussie dollar is at a really interesting point at the moment because if it does maintain this level, it can probably form a base at around that 70 US cent range and then look to recover previous levels of where it traded. If we have a look over the past 10 years, you can see that the average has been around that 75 to 80 US cent range. And we're still a fair way off. We're at 69. So there's perhaps another 10, 15, maybe even 20% in the Aussie if these commodities start to move. And the second factor, which I haven't gone into yet, is the US dollar weakening. When the US dollar weakens, the other commodities relative to the other currencies relative to the US dollar start to go up. And the US dollar has been weakening. A lot of this increase in the Aussie, sure, it is driven by resources and the positivity around Australia, but it's also driven by a weakness in the US dollar. There are vulnerabilities in the US economy. The US is in the middle of a trade war with China, and there's going to be a lot of other things that impact the US economy. And the Americans probably want a cheap currency because when your currency is cheap, it helps with your exports, it helps with your economy. And when you're fighting a trade war, you don't want an expensive currency, you want a cheap currency. So, what does this mean for property investors? Well, it's very important when we talk about real estate, we distinguish between residential real estate and commercial real estate. Commercial real estate is more currency sensitive because the investors that are buying office buildings and institutional grade property, if they want Australian dollar exposure, they will come in and buy commercial assets. They're not going to buy apartments or houses. They're going to go out and buy large assets because they're moving big amounts of cash. And so what we could see is the commercial side of the real estate market, which has been relatively subdued in Australia, start to move. And a lot of the office buildings, a lot of the retail malls, a lot of the industrial has been doing quite well. But a lot of those assets could perform better as more global look at moving money out of the US dollar and into the Australian dollar. So good signs for commercial real estate. What also happens is investors around the world, when they want Australian dollars, start to move in and lend to Australian institutions. And our biggest institutions are the banks. The Aussie banks are amongst the biggest, and they do borrow anywhere from 30 to 40% of their funding from wholesale markets, where if the Australian dollar is active, if the Australian dollar is hot, there'll be more money flowing in, and that'll help the banks. And when the banks can borrow better, they can pass on that price competition to the market, and you start to see more competition in the residential space too. So when the Aussie dollar is doing well, it's positive for both commercial and residential real estate. There's more money coming into the local currency. The underlying economy is doing well. Commodities are going up. We've got very low unemployment. The government's bringing in more tax receipts, and they can look at doing more in terms of cushioning the impact if there are certain segments that are doing it tough. And this is all very, very positive. It's important when you're investing in real estate to not just look at the micro, but to look at the macro. And there's no bigger macro picture than a country's currency. Or when your currency is going up, it means it's attractive. It means investors from around the world want to buy it, and they want to bring their money invested in your economy. So keep an eye on the Aussie dollar. I'm quite optimistic that the Aussie has now bounced off its lows. It's now going to look at trending back to its average where it's been over the past 40 years, probably in the mid 70s. And if commodity prices keep going up, it's probably going to go up more. If you're traveling overseas, that's good. But if you're not traveling overseas, it's still good. You want to be holding assets. You want to be holding Aussie assets because they're rising in value.